You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of edumacation, a little bit of strategery, a dash of unusual activity, and a sprinkle, a cherry, if you will, of hilarity on top. And you have the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. Always new programs on the horizon for you guys, so stay glued to that mobile app, stay glued to the website, or wherever you find our content, iTunes, Stitcher, Aha Mobile, TuneIn Pro, wherever you find our programs. Maybe you're a techie, you like to input that RSS feed into your podcatcher yourself. However you like to get our program, stay tuned to those because there's new ones coming down the pike all the time that may interest you guys. And of course, the mobile app, a great way to find all of those in one place. Stream all 300 plus episodes of the Option Block, and if you're up for it, you can download them for some offline listening, and then hit that feedback, hit that comment button, shoot us a question, shoot us a comment, shoot us an email, shoot us your insights, shoot us your trades that work, the trades that don't work, whatever floats your boat. We got a lot of great emails and questions and comments and feedback to get to on today's show, and I'm looking forward to it. But before we do that, let me introduce the rest of the old all-star panel, starting off with the man of many hats, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program.
Thanks, Mark. It's especially good to be here today. I spent most of the day in meetings and development, and this is one of those days where, as always, the show is the high point of my day. So I'm especially happy to be here. A good day in the market. Any day Amazon adds 5 points or more is a good day. So good to be here.
The more I hear about your day-to-day activities over there at OX, Alex, the more I start to agree with you that this is indeed the highlight of your day and the highlight of your week. Getting stuck in long meetings, conference calls, getting surfaced, the, shall we say, more esoteric client questions. Lots of fun stuff cooking over there in the land of the Viceroy.
Yeah, it's, OX is a big business, and the future of the OX Schwab combination is gonna be things like the hub. So I'm a real busy guy. We're building more hub. We're developing it out. We're moving it to mobile. We're moving it to Street Smart Edge. Street Smart Edge is going to get 3 and 4 leg trade ticket in a matter of weeks. So we are busy beavers here, making the experience better for both the OX and the Schwab customer. And I know that sounds like, a company line, but that's literally exactly what we're doing.
Well, you are indeed the Hub father. So with Hub being the big initiative over there, you're going to be involved in a lot of that stuff. I should mention there's a little bit of nickname envy going on the old network. We had a co-host on one of our other shows the other day, Anglin, saying he should be the viceroy. He was jealous of your nickname. I won't say who it was, Alex, but you're familiar with them. Maybe I'll tell you off the air. But a lot of envy circulating around. People want your cool nickname. I say, no, Alex has claimed that one and now belongs to him.
Let me tell you how popular the show has. I know I tell these stories about, my buddy from Merrill Lynch is standing in my driveway. But the other day, the doorbell rings, Sunday. The doorbell rang at 8 o'clock at night, and it was a neighbor. And, 8 o'clock at night, what's up?
Yeah, it's probably not something good.
Well, he shows me a stock certificate, and it's 200 shares of Amazon bought on the IPO that he bought for his kid in a gifts to minors account. And it's the physical certificate. It's certificate number 77, May 1997, first Amazon. And he said, so is this still good? What's it worth? And I, of course, said, oh, come on in. Can I offer you a cocktail? 200 shares of Amazon is 2,400 shares of Amazon today, which is a great deal of money, almost $750,000. So that neighbor is now my dear, deep, good friend.
Not a bad little thing to have lying in your desk drawer somewhere to dust off. Oh, here's $250,000 I forgot about.
Yeah, it's funny, but it's just ironic. I looked at the shares, and it was literally certificate 77. So interesting, and he's now an OX customer.
There you go. I like it. All right, and also joining us on the old All-Star panel today, you know him, you love him as the Rock Lobster, beaming in from the great state of Maine. Not as much battling for this nickname, Andrew, because it is so specific to you. None other than Mr. Andrew Giovinazzi from the pit, shall we say. Mr. G, welcome back to the show, sir.
Good to be back. It feels like it's been ages. Ages. Nobody wants to be a Rock Lobster, I guess, but it's okay.
Not a lot of B-52 fans floating around out there, I guess. I don't know. All right. And last but certainly not least, none other than Uncle Mike Tusaw from RCM Asset Management, helping the Skype gods along and having them put some favor down on him so he could join the program today from scenic and lovely St. Charles, Illinois. Uncle Mike, welcome back to the show, sir.
Doing well. Hopefully the Skype will hold off for another day and bless me with another hour of wit and wisdom on the option block.
I will say you're sounding excellent today, sir. So the Skype gods are indeed smiling. Let's get going with the show before they decide to mix things up.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the show we break down what was moving, what was catching our eye in today's activity on the old street. Those of you playing the home game, we are recording this Thursday, August 14th. You are listening to it. The first chance, anyway, the first wave on Friday, August 15th. But, of course, many of you tune in after the fact, days, weeks, months, even years after the fact. And we love that, too. A lot of great content in here. Not just the day-to-day breakdowns, but a lot of evergreen stuff floating around that is always of interest to the listener. Today, we're talking about what happened today in the old markets. Most of the markets rallying about 0.5 percentage point or so on the S&Ps, up about 8.5 handles. The Dow up about 61, 62 handles. The Qs up about 0.5 percentage point or so. And VIX cash, not surprisingly, taking it on the chin, down about 0.5 point or so, half a handle to 12.44. A lot of that rally, a lot of that buoyant spirits on the old street today, coming from a couple of different things. A lot of it coming from our friend Mr. Putin, who decided to talk down some of the fears about the Ukraine and Russia's involvement over there, and as a result, he was talking up the street a bit, so the market rallying as a result. And not surprising, the volatility also coming off a little bit as a result. Since you were the last one on the panel today, Uncle Mike, perhaps we'll start with you. What in this legion of activity today caught your eye?
Bonds. Ironically,
I'm sorry, did I toss it to Alex by mistake?
What caught my eye today Just looking at, just for example, TLT and IEF, they both came close to or around their 52-week high, and they didn't punch through it. So one of the things that I'll be watching over the course, I know this isn't time for around the block, but today I think was a pretty key day just from a technical standpoint for both those two underlyings, IEF and TLT. As to where they touched today. And yeah, the market went up, and yeah, Putin, he must have been long some futures or something. So maybe that's why he wanted to push the market up. Who knows? But the main thing that caught my eye on the day, I mean, gold and Apple were relative non-movers. The only in the metal space, silver, Wheaton had earnings, and so they went down a bunch today. But the silver and gold were relatively flat. But main thing that caught my eye today, it was definitely the bonds.
And of course, you had your quarterly party for Cisco taking it a little bit on the chin post earnings. You know, you popped a little bit of champagne in the office as a little bit
couldn't I?
a little bit of a celebratory dance on your part. Take that, Cisco. You said today, probably. I'm putting words in your mouth, but probably not too far off the mark, I'd imagine. All right. And while I'm done putting words in his mouth, I shall instead turn around and put them in the Rock Lobster's mouth. Mr. G, I'm guessing you were just buying premium willy-nilly today, degenerate premium buyer that you are. Am I correct?
Actually, we did buy a little premium.
Haha, I knew it. Was it perhaps out in Ford?
No, it wasn't. As interesting as Ford is looking, it was Disney, it was in the SPY, and that's about it. Nothing super fantastic yet, but oh my gosh, you got Maliki stepping down, you got the Russians, talking it up. Got the Qs, I think, almost at the highs of the year, if that's even remotely possible. And volatility on a one-way trip to Pallookaville at this point. Just totally annihilated. I am of the mind if we can get around this little, these issues, we might see those lows of volatility again on the year. Those like scary, really low numbers. The Qs are a half a point away from their high of the year. So our little market respite is quickly going the other direction in a really fast way.
That's why we like having you on the show, Andrew, is because of the technical terms you throw out there, like Pallookaville and other things that are just so endearing, so near and dear to the hearts of our many, many listeners. All right, and round up.
Well, we try to make them happy.
Yes.
We try to make them happy.
That is our job here at the end of the day, trying to keep the people happy. And who does that better than the Viceroy himself, known to perhaps throw a chilling tale or two upon our listeners. Let's see what he has in store for us today. Mr. Viceroy, what caught your eye in today's activity, sir?
So no wet blanket today, and the fact that I've turned Tucson into an economist troubles me, but Mike makes a really good point. And when I grew up in this business, the prime indicators you looked at were things like the tick and the TRIN and volume numbers. And lately, I think this market has been driven by macro. And Andrew pointed out you had a lot of really favorable news today, and we're back up to 16.7 on the Dow and 1955 on the S&P. But I think what's going on in the sovereign rate arena is really a key indicator of macroeconomic stuff. And you saw Germany had disappointing GDP growth, and if you look at the German 10-year, get this, it's trading about a 1% yield in a 10-year. The Japanese are trading a half. We're at 240. Doesn't look like we're going to hold 240. If we drop down into the 230s or even below, which I think is possible, this market's going to set new highs, not only on the Qs, but I think on everything. And, I'm old enough to remember NASDAQ 5,000, and we're within 10% of that, 10, 11% of that. Now, 10, 11% is not just a hop, skip, and a jump. It's a move, but potentially we could see NASDAQ, if the Apples and the Amazons and the Teslas continue to demonstrate leadership, we could see NASDAQ 5,000 again. I remember working at the SIBO last time NASDAQ was 5,000, and we're within not striking range, but within sight of being there again.
Well, I know you like broad names, Alex, and macro names. Doesn't get much more broad than Berkshire A, and good old Berkshire A making some headlines today, crossing the double six figure, 200,000 level for the first time today. That talk about just ridiculousness. Talk about using your stock as a bit of a marketing tool, a bit of a branding element in and of itself. $200,000 a share. That's just some crazy talk. So your friend there, Alex, could trade in pretty much all of his Amazon and buy a little more than one share of Berkshire A. That's just crazy town to me.
Yeah, it's an interesting equation, and I trade the B. I mean, I own the B and I trade the B, and I occasionally sell calls on the B. There isn't much vol, even though there's no dividend, but the B is an interesting trade. I mean, the A and the B for most of the last couple of years really hasn't performed. He's running on his buybacks, and obviously the run today, I think the B was up a couple bucks. There's been a couple stories lately about how he buys it anytime he can get it, how he does a buyback anytime he can buy it for less than 120% a book. And obviously the street thinks he's going to announce another buyback, which is what's sparking that.
Gotta love that. It's cheap at $200,000 a share. Keeping it a little bit closer to home from an options perspective. I know if Sebastian was here, he'd be all over this because he loves the fast casual dining sector. And one of the names lighting up the old tape today was indeed Red Robin, the gourmet burgers. I think that gourmet title perhaps a bit subjective there. If you've ever been to Red Robin, a fine eatery, but I don't know if I would call it gourmet. This is a name that usually does about 200 contracts a day, but taking it on the chin today, down nearly 20% to $52.68, and as a result, doing a substantial amount, nearly 20x that, about 4,700 or so contracts today. So a lot of paper in Red Robin. No surprise, given the sell-off, most of the activity was to the downside, and a lot of people gobbling up puts on that downside, about 1.5 to 1 puts versus calls. Not a name we talked about in the odd block in the past, but still one of the few names lighting up the old tape. This one make it into your pitch chat at all today, Andrew?
No, not in any way, shape, or form. It's some bad chain restaurant that Mark won't allow in the chat room. So as soon as you mentioned,
that's why I figured
like
you guys
that,
would be all over it. He loves stuff like Darden restaurants and all those kind of things. This is right up his alley.
Well, he hates them. So all you're allowed to do is buy puts or sell calls or, just a little. I guess it's typical. What? Rather sell it. Sure. There's not a lot of discussion. That's not what we're chatting about, basically, because the response is sold.
He's so one-sided. I get it. And by love, of course, I meant that he loathes them with a strong, passion, listeners.
Yes.
Which is why I like teasing him with them whenever he's on the show. But he's not, so we'll keep on rolling right on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what that funky tune means. It's time once again to dive into the seamier, the shadier side of the options business. Yes, it's time for the Odd Block. Going to kick things off here with a newcomer to the old Odd Block. Don't believe we've hit on this one in the past. This is TSRA Technologies, Inc., ticker symbol TSRA. Closing today, $28.67, up about 80 cents or so on the day, which is about 2.8%. And what caught our eye out here was a trade looks like it has all the hallmarks here of a newsletter trade, some newsletter paper filtering in to good old TSRA. In particular, it was the SEP. Oh, these strikes are fantastic. Obviously, a post-split, post-corporate action name. The SEP 29.48 calls, trading, when we profiled them on the site this morning, for about 55 cents all the way up to 70 cents, about nearly 1,700 times on the day. For, like I said, prices 55 to 70 cents against open interest of just 160 contracts. So not a lot of paper out there, all open in paper. What caught our eye was that essentially most of this went up in scattered small sizes. Small size started lifting the offer early. That's always a sign of a newsletter. Come in, just buy. And then it continued throughout the day, regardless of price, regardless of volatility level, regardless of all the other stuff like that. Bidding these things up again and again, all the way up to 70 cents. Again, those are two very, very primary indicators of newsletter paper. A total of nearly 2,000 went up on the day, just a hair shy, 1988. So some newsletter out there loves these SEP 29.48s. Andrew, what's your take on this? Seemingly the lemmings are out in force here in TSRA.
All the action centered around the 29.48.
I had to read that strike like 3 times to make sure I was looking at the right thing. That's just insanity.
I write stuff up like this, and I'm like, you know what? Longo's going to think this is a typo. This might just screw him up on air, so I'll put it in anyway. I'm going to do this.
There you go, making my job easier all the time.
I'm thinking newsletter stock. I believe is at the lower end of the 52-week range. You got a technology sector trying to make some, maybe new highs. So for whatever reason, I don't know what this company does, but clearly they do something. They surely don't make any money. But it looks like relatively cheap implied volatility for a tech company that has, some potential to move. So it doesn't look terrible. I mean, the stock was just trading like $22 in the beginning of August, and now it's trading 29. So, I mean, it feels like it's a little late, in the move here, but we shall see. But something has materially changed in the business of this company, and I believe that's what all this paper is trying to jump on right now. Although 22 would have been nicer, now they're jumping on it at 28 and change.
All right, moving on to the state of New Mexico, ticker symbol NM. No, actually, this is Navios Maritime Holdings, Inc. Again, ticker symbol NM, closing today $8.76, up about 34 cents, or about 4% on the day today. This is our typical odd block type of name, doing about 600 contracts a day. On average, doing nearly 3x that, about 1,500 contracts today going up in good old New Mexico. And what caught our eye in particular out here was a decent chunk of the Jan 10 calls, the Jan 2015 10 calls. When we profiled them on the site this morning, it was about 800 or so had gone up in 2 pretty much mid-sized blocks at that point, going up for about 55 cents, paper buying the bulk of those. What also caught our eye, though, is 6,000 and so open on that strike. Given that these are buys and there are a lot open on the strike, the initial assumption is that, of course, this is some guy closing out perhaps a covered call or a buy right on this strike. But given the fact that this is Jan, it would be a wee bit soon to be pulling the trigger and closing out this trade. There's no other signs that he's rolling anywhere else or readjusting. So it looks like this might be some piling on, an additional 1,000 perhaps piling in here to open. Of course, we'll have to wait to see tomorrow to know exactly, again, due to the many, many myriad vagaries of open interest that we've discussed on this show many times. But still, a little bit of a head scratcher out here in good old New Mexico. Mr. Andrew, what's your take on this state of fun in the sun?
Wasn't Georgia O'Keeffe? Didn't she live in New Mexico, paint all those crazy paintings?
I believe she was in that area. Yes.
So this is one of those. What is this? A dry shipper or something? Navios Maritime Holdings. A couple of years ago, this was like a $3 stock. Now it's a $9 stock. It pays a dividend. It's just made like the power move from the low 7s up here. I have a feeling somebody's trying to jump on this one to get a little long. They were kind of stingy with how they were buying it, not quite lifting the offer, sort of putting a bid out there. Looked like some accommodative paper. I find it odd that somebody would want to close a buy right at this level. If they got into it at lower levels, they would make a nice return. But I'd be interested to see if more paper, and so that this is a name that can actually keep going up. Because if these dry shippers can actually start making some money, this again could be an interesting name. So I'm again watching and waiting on this one, but just not feeling like a buy ride, I have to say. Not like a buy ride close, even though kind of all signs point to that. It just most likely, I think somebody's just kind of jumping in and seeing if this whole segment of the, what I guess is a whole sector can finally get off the basement floor here and start becoming real stocks again.
Again, listeners, this is why we do some analysis here on the old odd block, because there is, of course, the surface interpretation, then perhaps what lies beneath, and all of our radar, all of the hairs on the back of our neck standing up on this one saying perhaps there's something else afoot out here in the good old state of New Mexico, a.k.a. Navios Maritime Holdings. All right, and closing out the old odd block today, you got to have some biotech names in here, otherwise it just wouldn't be the odd block. Today's victim/guest is NKTR Therapeutics, with the old funky spelling of nectar, NKTR, and ticker symbol NKTR, closing today about 13.5, up about a quarter or nearly 2% on the day. Again, a fairly robust name from an odd block perspective, doing just a hair shy of 1,000 contracts, on any given day, and doing about 7,000 or nearly that today. And what we saw in particular was closing out some in the money front month to be precise. The E.g 13s, again, closing today 13.5, these roughly 50 cents in the money. Expiration, if you ever trade on expiration, it's some interesting time. You could get run over, you can maybe get a chance to close out some positions or put them on at some pretty attractive levels. This guy taking the opportunity to do just that. When we profiled him this morning, we profiled at about 2,712, went up of the E.g 13s going up in one big block, and then a total on the day of 6,231 on this strike, and that's against open interest of 6,678. So clearly this guy closing out here on a lot of open interest. And I mentioned, sometimes you can do well, sometimes not so much. It's this one actually on this trade, actually a little bit below parity at the time of execution. So perhaps not the ideal way for this guy to get out. But still, you got to close out your front month, particularly when you're hovering around the at-the-money strike. We've advocated that many times here on the show. So this guy doing what needs to be done, even if perhaps not getting the best level to do so. Mr. Rock Lobster, take us home here with this size in the money call print on good old NKTR Therapeutics.
Yeah, the two basics for this one is apparently the guy, has got to get out. Nectar made a little run from like 10 to this level here at 13.5, so maybe they didn't pay very much for him. But closing at 45, maybe he paid 10 cents, 15 cents or something like that, and this is his shot to get out. So he closed him about a nickel to 8 cents underwater. But the next thing, he's not rolling. So normally if you were kind of right on that, kind of take their money and roll it out, but there ain't no roll here. So maybe they think whatever loveliness that was happening in nectar, you know what it is? Nectar, that kind of reminds me of like Spicoli. That's the Spicoli selling for nectar, That's
an old one.
That's reaching back. I had to reach back to the 80s for you there for that one.
Yeah, but you're right. He's not repositioning here. And you're also right. When you got some money in your back pocket, particularly a day like today, in the money call, gapping up 25 cents, you're going to take your money and run. So even though your first blush, selling below parity, that sucks, this guy's probably still happy. He probably got 3X on his trade. So if he gives up a few cents to get it done, he's probably not crying at the end of the day.
No, and he's just getting out, but not rolling either. So probably if he's smart enough to make the trade in the first place, he's not too interested in staying long the name. So it's kind of a at this point, I think as far as interest goes, it's more of a meh, but nonetheless, the guy taking his chance to getting out today, and probably smart to do so since he's running out of time tomorrow.
All right, that's all the time we have for the odd block. But before we end this segment, really quickly, listeners, I should mention we talked to you about you guys sending in some of your trades and things, but we talk about a lot of names here on the odd block. We profile a lot on the website, a lot more unusual activity, actually. But if there's a name you see that we don't talk about, you want to hear about, hey, what happened with this trade? What do you think happened? Send it in to us. Well, maybe we'll profile it for you, or perhaps you see a trade we're profiling, you don't understand it, why they would do something like this, or why we perhaps analyze it the way we did. Let us know. We'd love to hear from you, and we'll be happy to walk you through that analysis in perhaps a little bit more detail. Meanwhile, it's time to keep on rolling right on into the fancy hat block, a.k.a. the Express block.
The Express Block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what this segment's all about. It's time for the Viceroy to don his fanciest of fancy caps and take us behind the scenes into the land, nay, the realm known as Options Express by Charles Schwab. Mr. Viceroy, what was cooking in the land of OX today?
So a couple things were kind of lighting up the screen today. And the first is the social networking triplets, as we call them here. Twitter, LinkedIn, and Facebook all were active today. Mentioned at the beginning of the show that Amazon was active, surprisingly active. It's had a 2-day stealth rally of, I think, about $13, $14. And of course, a week ago it missed, and everybody was counting it out for dead. And as is always the case with Amazon, it has come back a bit. But that was lighting up the tape here today. Because I was in meetings, I didn't get a chance to spend any time with Grigas today. So I'll use a little bit of the time just to talk a little bit about what's going on the Schwab side, and highlighted a little of this at the beginning of the show. But Schwab Mobile now does have a low power version of Idea Hub. It will shortly have the full power version of Idea Hub. And one of the things that's been keeping it from having the full power version is Idea Hub has iron condors in it. It is the industry's first quantitative iron condor finder. And Schwab does not have the 3- and 4-legged trade ticket, but it will. Target date now is first week of September, which is soon. And I know that's got to be it's exciting for us here. It's got to be exciting for Schwab customers who have been waiting 2.5, 3 years since they bought us to see the 3- and 4-leg trade tickets. So Nina built a webinar on that, and those will literally start in the next week or so people are prepared for it. But a lot of innovation going on, a lot of interesting stuff going on in terms of enhancing both the OX platform and the Schwab platform. And that's what we were doing here today at OX.
Great. Thank you for that, Mr. Viceroy. And now, listeners, it is indeed Thursday, at least when we're recording this, and that means it's time to break open the old mail block. So let's get right to it and get into some of your questions and comments.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to join us here on the old All-Star panel, make your questions or comments or complaints, or all of the above, known here on the show. No shortage of ways for you guys to do that. The easiest way is download the mobile app. It's all baked in there. Of course, you can find us on Twitter, twitter.com/options, facebook.com/theoptionsinsider, or on our website, post a comment, shoot us an email, questions@theoptionsinsider.com. No shortage of ways for you guys to make your questions and your comments known. Just like our first listener did here, Mr. Everett, he writes, really enjoy the show and find it incredibly useful in helping break down the complexities of more technical trades. Thank you, Everett. He goes on to say, that said, is it possible to point to 3 key technical-focused factors that you believe to be the most important factors for consideration when trading biotech options around a catalytic event? And he puts in parentheses, such as the FDA marketing approval, etc. I doubt an example is necessary, but to clarify, I don't mean examining the strength of the company's clinical trial submissions in anticipation of an FDA decision. Rather, are there 3 to 5 stocks/options focused factors, such as implied volatility, delta, Vega, etc., that you would recommend analyzing in anticipation of trading options around a biotech's upcoming catalytic event. I recognize these factors might be different based on the strategy one chooses to employ, but if possible, what would you say those 3 to 5 factors should be just generally if I am willing to employ a diversity of strategies? Thank you in advance for your time and consideration, Everett. Well, Everett, this is a great question. If you listen to the show at all, and you certainly have, then you know we love our biotechs here. The odd block is ripe, overflowing, some might say, with biotech names. That said, you mentioned a few things right off here that I think you really should focus on. When we're talking about options, you mentioned technical things. We're not going to talk about technical analysis here. That's not our purview. We all take a dim view of it here on the show, except for Uncle Mike. He's the big technical fan. But when you're talking options, the things you need to follow are really and pay attention to are almost exactly what you mentioned there. But I switched the order around a little bit. You mentioned implied vol and Vega. Those are the things you really need to focus on. And not just when you're talking biotech earnings or biotech catalytic events, but any real event you want to pay attention to, like an earnings event or things like that. Vol is where the rubber meets the road from an options trading perspective. That's going to dictate what strategy you want to employ. So you first and foremost have to pay attention to that level of implied volatility. We do that a lot here on the show by looking at things like the at the money front month or weekly straddle to give you an idea of how much premium is being baked into that event. It could not be at the money. It could be whenever this event is being timed out. Start looking at that month and that series of options that expire then to get a feel for what the market is gauging from an implied volatility level. Andrew's talked a lot, and we've all talked a lot on this show in the past about trades going into these types of events, and I've mentioned it many times on the show as well, it's like a balloon where the volatility starts to creep in, that balloon inflates and inflates and inflates all the way up to that event. And then when the event happens, when the expectation has passed, unless it's a calamitous event or a very strong surprise to the upside, that balloon's going to pop and all that vol is going to go away. So that will really dictate the strategies you're employing as an options trader. Like I said, Andrew has said many times about doing the free juice. I'll let him get into that a little bit more if he likes in a second. But of course, the other side of that is if you think the vol is overpriced and you think you can maybe collect a lot of that coming out of the event and you don't mind riding through that rough patch, which is the balloon popping after the event, that could be a little bit tumultuous for the faint of heart, then you could sell options and do strategies like that. But volatility is going to be first and foremost in any of these types of catalytic events that you're talking about. And once you have a gauge of that, of course, go back, look at your historical indicators, look where vol usually is in certain times of the year for this name, look how vol usually has performed going into and coming out of events like earnings and FDA announcements to give you a better feel for how your name trades. And once you have a feel for that, you can relatively gauge where the vol is now as opposed to historical. Is it too high? Is it too low? And that will start feeding into the strategies you're doing. Do you want to buy premium? Do you want to sell premium? That sort of thing. So I would say forget all the other stuff you're talking about. Focus primarily on vol, and then you can go from there. Andrew, since I invoked you many times, I'll let you go next if you want to do a ringing endorsement for your buy free juice ahead of the event type strategy.
Well, every biotech is different. Basically, there's not a lot to lose owning juice prior to a news event. Reason being, it really doesn't decay. The volatility kind of keeps ticking up and up and up, like you said, in order to sort of make up for the time decay. And you could get the magical, they announce early and kablooey, the stock moves a whole bunch. So that is one scenario. Another scenario that I used to use as a market maker a little more is kind of owning long-term volatility in these biotechs, that it gets kind of cheap. Biotech stocks that have the potential to sort of make a move or to announce something. Looking at maybe some of the volume in some of them and seeing if there's collectors of long-term options. But normally the best kind of trade is sort of that inverse butterfly where you buy the at-the-money options and then you sell the wings. And you just sort of take what you get on that. So normally when the skew's that high, it works pretty well. Another way could be a ratio call spread where you buy 2, sell 1. If you can price it out well enough, again, depending where the biotech is, but my normal rule with a biotech stock going into any one of these events is you never really want to be net short contracts. Most of my biotech trading, the only time I really lost any money was when I was short a few too many contracts, and then bad things happen. So as expensive as the volatility gets, it's amazing for so many of these how underpriced it can still be. So again, my general rules would be, you don't want to be short contracts. You want to try to use the skew into your advantage. You want to buy whatever is relatively cheap, volatility-wise, and sell what's relatively expensive. You also have to understand what the earning dates are. So, those are kind of my general rules for those things. And, then you see what happens. It's still kind of a crapshoot on a lot of that stuff because dates can change. All kinds of things can happen. There's no guarantee about anything when it comes to a biotech and an FDA announcement, so you have to be careful about that. It's still, you look at those stocks like, I guess, what was that, Puma, some stock that was just up about $100 or something like that. It's very tempting. It drives a lot of interest in the biotech names, but you have to be careful on how you select that stuff.
Uncle Mike, I know you love playing in the biotechs. It's your primary trading space. I know you talk a lot about Apple here on the show and gold, but you're really knee deep in the $3 biotechs. What do you have to say here for our friend, Mr. Everett?
Quite a bit. I love the biotechs, and I would highly recommend all of our listeners be net short as many contracts as possible whenever dealing with a biotech, and I'm going to tell you why. I don't know how many times XYZ stock has been at $50 a share and someone sells a $20, $25 put spread, because after all, you're getting 10% on this put spread, and what are the odds of it actually moving that much in that time frame anyway? I don't know how many phone calls that I've had the next day and have gained a ton of business through the years from just that scenario alone. So with that, folks, if you're going to be net short contracts, that's a dangerous game to play. And obviously I'm saying it sarcastically in terms of being net short contracts because this is the facts. I've been in the business over 10 years, and that has gained a lot of business for me throughout my time in this business. So that's my opinion on how not to play the biotechs anyway.
Alex, I know you look askance at all things biotech, so I won't deign to throw this one to you, but there is another one coming up that I think here is right up your alley. This one comes from Joe. Listener goes by the mighty handle of Joe, and he writes, my question deals with order fulfillment on a spread. During the wild days that Twitter had a few months back, the IV shot through the roof, the vol skew went way out of whack, and it was possible to put on long spreads for even money or a credit. A great thing. We talk about that all the time here on the show, listeners. He continues here, but I had to leg into the spread because my broker said I could not get filled for even money on a spread. Which leads to my question, how are the smaller lots, and he puts in parentheses, I usually trade 10 to 50 contract lots, handled on the market with respect to their fulfillment? Logic and the current state of technology leads me to believe that like strike prices are grouped together and sold on the market in order to obtain a better leverage when trying to obtain a sale price. If this is not the case, how does fulfillment take place with spreads? Sincerely, Joe. That's an interesting viewpoint on spread executions there, Joe. Mr. Viceroy, let's set our friend Joe straight on how these...
That's a Viceroy question.
Yes, I agree. Mr. Viceroy, set our friend here, Joe, the imaginatively named Joe, straight on how these spreads are actually fulfilled.
Okay, so 3 of the exchanges trade spreads as spreads, and it might be 4 now, which means the order goes onto the brokerage house's smart router and gets transmitted to, generally for spreads, the ISE or the SIBO, and the spread trades as a spread. Nothing is grouped or clustered. The smart routers send the order when your order gets here. I'm not really sure why your broker wouldn't let you do the spread. Some of the smart routers have sort of metrics in them that say, this isn't possible, that isn't possible, reject the order. Many of the smart routers don't. So chances are a spread is going to go to SIBO or the ISE where there are spread books. Chances are it's going to go as a spread. The exception might be if there's an option trading out of line somewhere else, and to get the NBBO, the National Best Bidder Offer, the spread has to be done on 2 exchanges. Candidly, brokerage houses are we do that because the smart router will do it. But the spread's going to go onto the smart router. It's going to get routed, as I say, with most spreads, either ISE or SIBO. I think the Amex still manually handles spreads. By the way, manually handling a spread was the strength of the Amex because they had spread brokers, and essentially your order would be represented in the crowd as a spread. So why your broker kicked the order back, I'm simply not sure, unless the logic in their smart router, I noticed you didn't name the broker, so I'm hoping it wasn't us, but the logic in their smart router may say reject under these circumstances, but smart routers send it immediately. There's no queuing, and it gets to the exchange an instant after it hits the brokerage house.
I'm trying to think how that would work in his scenario where the brokerage houses would just aggregate orders until they had enough on similar strikes to put them all into the marketplace. You might be waiting quite a while in those scenarios and some of these less liquid names until they had 2 orders to go. So
yeah, you can't do that. And you got to realize most brokerage houses, smart routers, are going to Citadel, they're going to Susquehanna, they're going to one of the big market-making firms who is simply going to make everything right. I mean, if a brokerage house puts something up on a smart router and it fills outside of NBBO, it immediately generates a message to the trading desk that says, hey, go investigate this. And you'll go out to whoever your aggregator is, and you'll say, fix this. And you won't say, please fix this. You'll say, fix this. This is what we're entitled to. NBBO was violated. And unless you got a reason for it, and there can be reasons like very fast markets where trades are delayed, markets where maybe the quote coming off the primary stock exchange is delayed. But in the case of being able to see a spread that isn't going to exist for long because it's trading at some optimal level, your broker should be able to go out and get that.
All right, great. We got time for one more quick one here in the old mail block. I wish we can do a dozen or more of these listeners. You guys send in such great questions. Maybe we'll do an all mail block episode one of these days. But he writes, this comes from Mr. Lammy. I like that. He writes, hello. What parameters can one use to scan for unusual options activity in real time? What is the thought process behind it? And he puts in parentheses, I can use my intellect or practice for how I can start spotting these myself. Is there a way to receive alerts for unusual activity section on your website? Well, that's, of course, referring to the optionsinsider.com. And the answer to that one is yes, but we're going to have more coming very soon in terms of newsletters and things like that you can queue up and subscribe to on our site, all for free, of course. So if you want to get all these unusual activity alerts shoved down your face the moment we put them up, then you can do that very soon. So stay tuned for that, Mr. Lammy. As for the first part of your question here, what parameters? Well, we talk about that a lot on the odd block. The first one we all queue off of, and the first one we're looking at whenever we're scanning for the market is, of course, unusual volume. A lot of the names we talk about, I'll say, hey, they do an average of a couple hundred contracts a day, doing 5,000 today. That's your first indicator that something unusual is afoot, and then you start digging in from there. Of course, it's not always unusual volume, and of course, if you have a very liquid name, it's going to be hard to sort out the signal from the noise there. So you start doing other things, like you can search for big changes in implied volatility on a given strike. If you want to be a little bit lagging as opposed to real time, you can do changes in open interest. And you can do other things that are also a bit lagging, big changes in the underlying. Of course, that's going to probably correlate back into big changes in options volume. So you probably search for the latter, you get that information a little bit first. But that pretty much is the two big ones, the change in volume and then the change in implied volatility. And then you can kind of run down the list from there, change in open interest, change in underlying movement, things like that. But those first two will get you the lion's share of the interesting alerts. Anything to add there, Mr. Andrew?
Not really. I thought you did a good job.
That's why I get the big bucks, sir. All right. Good question there, Mr. Lammy. Thanks to everybody who wrote in. Like I said, we'll try to get to more of you. You guys are writing in with such great questions. I love to see them. I love to talk about them here on the show. But we have to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, let's dive into the Around the Block really quickly before the Skype gods frown once again upon Uncle Mike Tusaw. Uncle Mike, what are you watching for the rest of this week, sir?
Bonds. I've never looked at bonds so much in my life, but just curious to see if we make some new highs on it. And I think that's going to be the one of the telling signs of what could be to come. Also watching the general things with which I watch, but bonds are probably the main thing on my mind right now.
So what's up? You having a hard time sleeping out there in St. Charles? Is that what's getting you into the bonds here? What's the deal?
I guess so.
All right, here I am impugning all of the many bond traders and fixed
Jump
income
on the
traders
boat with the 10-year note
in our audience. Since we're talking bonds, Mr. Viceroy, what are you watching for the rest of this week? I'm thinking Uncle Mike's stealing a little bit of your thunder.
I've created a monster. I've turned Mike into an economist. Given what's going on in the world, I think bonds are the sort of the the indicator of geopolitical risk right here. And what you saw in the German 10-year today is really indicative of Germany being the safe haven and their economy slowing. Also looking at VIX, I think VIX is going to break down some more. We wrote a research piece on it today, and there's still a lot of forward value. The SEP was still trading $1 over the August when we wrote early this morning. I think some of that's going to come in a bit as VIX goes down. Be interesting to see what this Russian convoy of 300 white trucks going to the Ukraine turns out to be. I don't know how to second guess that. But looking at interest rates and thinking this market's going to go a lot higher, and unless there's some horrible geopolitical events, I think this market could melt up. And I think that will not surprise too many people.
All right. Mr. Andrew, what are you watching for the rest of this week, sir?
You know what? I see all those white trucks, and all I could think of is Trojan horse. Like, I wrote a blog about it earlier in the week. The white trucks are coming, and the doors are going to open. All these Spetsnaz commandos are going to come out and take over the Ukraine. There's no aid in there. So that would be Putin's last big hurrah.
You've been watching a little bit too much old Red Dawn movies, old 80s action films.
I know. Warriors!
That would be Wolverines, but it's all right.
Okay. Besides my my lunatic daily ravings side on the white trucks, I'm of the mind now, the way the market is just destroying implied volatility, that we're going to see the 11 handle in VIX tomorrow. The market is going to go higher next week in the fall. There's no real economic news. We got 2 weeks here of not much happening. Malachi's stepping down. You don't hear bad problems. I mean, everything I think that was driving stocks down was just some sort of leadership worries. Seems like the president, and the market is driven by, what's going on in the Oval Office. Is just like anything else. If everybody's confident in what's going on, everybody the market gets behind that. So, as soon as we start dropping bombs, and they also earlier in this, I guess midweek, said they might go in. They might go in and rescue people. So the fact that is back on the table again, maybe it might slow down some of this, we'll just call it Middle Eastern activism we've been seeing. But stocks like it, right? They like equities. The most you want to know when the market's going to stop going up is when there's just a total lack of clarity on anything. When the more confusing, geopolitical gets, what the euro is worth, all this other kind of stuff, that's when stocks really dive. And the more certain things are and the more clear as far as deficits and, who's running the White House and all this other kind of stuff, stocks like a steady ship. That's what really ultimately makes them go up. Something has to be relatively clear. So the more we see of this kind of clarity, the better the more bullish for stocks. So we had great earnings. They had top line revenue growth for the first time in a while. Everybody thought that was done. So, it would not surprise me for us to see some of those higher highs again, or even breaking out of that. So I'm not getting in the way of volatility going down, and I'm not getting in the way of the market going up. Let's just put it that way.
All right. On that bullish note, we're going to call it quits here on this episode of the Option Block before this bullish euphoria leaves all of us here. But before we go, let's check in with each of our cohorts here on the old All-Star panel. See what they're cooking up that may interest you until the next time all of us can gather together here around the old ASP. Uncle Mike, we'll start with you yet again. What's coming down the pike over there in the land of RCM?
Opening up the doors again, folks. We have our latest batch of newer clients in the door. And if you're someone that's just looking to contribute $500 a month towards your retirement and are interested in working with an advisor who kind of likes options, such as myself, would love to have you. Feel free to give me a call at 312-212-3531 or send me an email at mtusaw@rcmam.com.
Good stuff, listeners. Take advantage. Speaking of taking advantage, Mr. Andrew, is it too late for them to take advantage of your options boot camp?
The simple answer is yes, you're totally out of luck. We near filled it up, and Mark is well on the way in our boot camp. It's been nice having all the new people in asking questions and stuff like that, so I think it's going well so far. I'll teach a couple classes Saturday morning from 10 to 1. But our next thing is I will be at the Money Show on September 12th. I will be talking about basically short gamma positioning, and I think that's in the afternoon. And it's in the New York Stock Exchange, so it's kind of a cool venue for the Money Show. I'll be there, and jump in and you can hear me yak, and then you can throw stuff at me if you don't like what I say, but I'll throw it back.
At the NYSE, that's way too legit for a Money Show. They need to be down at the pier somewhere, hawking their wares left and right.
No, but it's legit city, I guess.
All right. Speaking of legit city, doesn't get more legit than the Viceroy. Mr. Viceroy is coming down the pike over there in the land of Options Express by Charles Schwab.
The next live event is August 23rd, live from Seattle. Jimmy and the crew will be out there, and live events are simulcast on the site. So if you don't want to fly all the way out to SeaTac, where you can no longer buy a McDonald's hamburger because of the $15 minimum wage, you can watch it from home. I'm in political trouble now. Monday, the 18th, this coming Monday, Nina will do she'll do a trading platform and a site tour. You get to see all the new tools. You get to see the walk limit. Tuesday, the 19th, Jim Wyckoff, who writes well-known Wyckoff letter on futures, is going to be doing his monthly futures outlook. All events are free. Just come to optionsexpress.com. Click on the Educate tab.
Good stuff, as always. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster, and of course myself, who shall go nameless, I'd like to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.